the coin. So the second thing I would definitely always advise you to do is do your own research before you invest. I didn't do this. Wayne didn't probably do this when he first started off. I got sort of sucked into like a YouTube channel, and I started investing based on what these YouTube influencers were telling me to do, and I got burned so bad. I'm going to tell you a little bit about that later on. So that is something if you take away from this workshop, so important that you do your own research before you invest. You should be making the decision, a conscious decision based on your research, not anybody else's. Okay. Third thing here that I would definitely advise when you're getting started in crypto, when you do invest in a coin, do not leave it on a coin exchange. I never leave my crypto on the coin exchange. So I mentioned Binance there. When I buy cryptocurrency on Binance, I don't leave it there. I could. The only problem with that is it's not safe. Okay. So what I would definitely advise you to do when you do invest in crypto is to protect your digital assets and to move them onto an external digital wallet that only you can access. Okay. So a digital wallet is like a wallet that you keep in your pocket where you keep your cash. It's a physical thing. Your digital wallet is literally on your phone. I'm going to go through different types of ones that I use. They're free. They're really, really safe. You only have access to them. Nobody else can get them. It's literally, it's so safe, and nobody can access your crypto assets. Unfortunately, Binance, for example, is a big coin exchange. They have a lot of security, but it's not a foolproof system. It can be hacked, and some coin exchanges have been hacked, and all the crypto literally taken off it, and people had their life savings stored on these coin exchanges, and then they're gone. So that's definitely a piece of advice I give you. Once you do start investing in crypto, always remove it onto a digital wallet, which I'll tell you a few examples later on. Number 4 is really, really important as well, is to set targets, because crypto charts, again, I'm not a day trader, like they go in waves. Like the charts will go up and they'll go down, they'll go up and they'll go down for different periods of time. So I'm really going to encourage you not to get greedy with your investing. Okay, be smart, set targets, because again, you'll invest through your research in good crypto projects that have a future that you believe in, and you should actually set targets. Once this coin reaches a certain price, I'm going to sell some of my coins to make my initial investment back. So we want you to limit your risk, and we want you investing a lot smarter, because a lot of people just, as I said, like me, starting off, watch a YouTube video and I dump like $1,000 into some coin that some guy on the internet told me to do. It's just, when you think of it sort of rationally, it's stupid. But unfortunately, when people do come online, they go onto Google, they end up on YouTube, or they end up on Facebook groups and so on. Okay, so I want you to do your own research and set targets. When the price does begin to rise eventually, start taking little profits to cover your investment and take the risk off the table. That's just some general advice that I would do if I was starting in crypto. Okay, just talking about beginner mistakes. Okay, and I made literally, there's 4 here on the screen. I made all of them. Okay, so many investors only buy coins when they are rising in value, and this is something I did. The very first mistake I did, this is known as chasing green candles. I'm going to show you an example of what this looks like in a second. So that's what I always did when I heard like a coin was pumping. I get really excited and I buy into that coin. That the price is going up. It's all, I'm so excited and I'm going to make millions. And suddenly then the price just plummets after me investing in it. It goes up for maybe a day or two and then it starts plunging, and I start seeing all these red candles and the price is dropping, and I begin to panic, and I want to just not lose all of my investments. So then I sell at a loss. And that's, again, it's just the crypto market is so heavily manipulated. It's an emotional game. It plays on people's emotions. So you have to be able to sort of separate yourself from that. That's really, really important. And I didn't do that at the start, and I lost a lot of money, unfortunately. I don't want that to happen to you. So I'll just show you again. Wayne, just let me know you can still see my PowerPoint slides, because I just
can see it loud and clear. I'm just answering some of the questions in the comments rather than asking, but
yeah. So this is an example here of green candles, okay? And this is pretty Aiden mistake 101 when I invested in crypto. I literally watched YouTube channels, YouTube influencers telling me this is the next big thing, and I would buy up here when the price was pumping. But all these people, like the mainstream media, even on CNBC, when they're telling you to buy Bitcoin, all these bigger coins, they have an agenda. They want you to buy because the price is pumping, and someone is bought further down here, and then they start selling to take their profits, and you're left holding the bag of coins as it depreciates in value. And this is known as red candles. Okay, these red things here, when the price begins to drop, nobody likes to see this. This has been happening quite regularly now in the crypto market. People start panicking. They've been told to buy, and now the narrative changes, and then they're told to sell, sell, sell. So it's pure manipulation. People don't realize it, particularly if you're new. People just think that, oh, the market's done, it'll never recover, I need to get my money back or not lose anymore. So people just panic sell, and they start chasing red candles. So they're definitely newbie mistakes most people make when they're investing in crypto. I